If you feel like you're constantly fighting the market, getting tangled up in confusing signals and making emotional trades you regret later, well, you're going to want to stick around. Today, we're diving into a really powerful rule-based system designed to bring some serious order to that chaos, the Woodies CCI. I bet this slide feels pretty familiar, right? It's the classic trader's dilemma. You've got all this noise coming at you, conflicting signals, and it just leads to paralysis. Or even worse, you end up making trades based on a gut feeling instead of a rock-solid plan. This is exactly the problem the Woodies CCI system was created to fix.
So here's how we're going to break it all down. First, we'll go back to the beginning, see where this whole thing came from. Then we'll get into the anatomy of the indicator itself, so you know exactly what all those lines and bars mean. After that, the really fun part, decoding the key patterns. Then we'll talk about how to actually trade with the system, and we'll wrap it all up with a much-needed reality check on its strengths and its weaknesses.
To really understand how to use any tool, you've got to know its origin story. So, to get a real grip on the Woodies CCI, we first need to look at the foundation it was built on.
Okay, so the system's DNA really comes from the Commodity Channel Index, or CCI. A guy named Donald Lambert developed it back in the 80s, and its original job was to spot cyclical turns in commodities. The best way to think about it is like a rubber band. It just measures how far the current price has stretched away from its average. And, the further that rubber band stretches, the more likely it is to snap back.
So, along comes a trader named Ken Wood. He saw the genius in Lambert's idea, but felt it could be so much more than just a simple overbought or oversold signal. He basically took that single line and supercharged it, turning it into a complete trading dashboard. As you can see here, he added things like histograms and extra lines to give us a much deeper, more structured picture of the market's momentum.
All right, so what are we actually looking at when this thing is on our chart? I'll admit, when you first load it up, it can look a little busy. But let's break it down. It's really just a few key pieces all working together in perfect sync.
Let's walk through this dashboard. The main solid line, that's your trend CCI. It's telling you the overall trend direction. That faster, dotted line, that's the CCI Turbo, and it's your trigger for spotting entries. Now, the most important part of this whole thing is that zero line right down the middle. Think of it as the 50-yard line in a football game. It separates the Bulls from the Bears. Those colored bars, that's your histogram, showing you the force behind the current move. And finally, you've got those extreme levels at the top and bottom, which are basically warnings that a move might be running out of steam.
And here's the absolute key. Don't get bogged down in the complex math behind it all. The indicator is doing all of that heavy lifting for you. Your job isn't to be a mathematician. Your job is to become an expert at recognizing the patterns it shows you.
Okay, this is where it all comes together. We're about to learn how to translate all those lines and bars into high-probability trading setups. The entire system really just boils down to spotting a handful of key, repeatable patterns.
First up, we have the zero-line reject, or ZLR. This is hands down one of the most reliable signals in the entire system. It's so simple too. In a clear uptrend, you'll see the CCI pull back towards that zero line, but then it just bounces off it before it can cross. It's a powerful sign that the buyers are still in full control and the trend is likely about to continue.
Next up is divergence, and this is a huge one. Think of it this way. The price of an asset is making a new high, like it's climbing a mountain. But the engine, the momentum that's measured by our CCI indicator, is sputtering out and actually making a lower high. When you see price and the indicator moving opposite directions, it's a massive warning sign that the trend might be running out of gas.
And this slide lays it out perfectly. On the left, that's positive divergence, a potential buy signal. Price is making a new low, but look at the indicator, it's making a higher low. On the right, you see the exact opposite, negative divergence. Price pushes up to a new high, but the indicator just can't get there, hinting that a sell-off might be coming.
And there are a couple of other key patterns you've got to have on your radar. A trendline break on the CCI indicator itself can actually give you an early warning that the trend on your price chart is about to break too. Then you have what's called a hook from extreme. This happens when the CCI goes way up into overbought territory or way down into oversold and then just sharply hooks back. It's a sign that the move is exhausted.
So we've got the components, we've got the patterns, theory's great, but how do we actually trade with this thing? How do we turn all this knowledge into a disciplined, repeatable strategy? Well, it all comes down to following a very clear set of rules.
This whole philosophy is built on discipline. So here's the playbook. Step 1. Use the zero line as your filter. If the CCI is above it, you are only looking for buys. If it's below, you're only looking for sells. Period. Step 2. Be patient. Wait for a textbook, high-quality pattern to show up. Don't chase every little wiggle. Step 3 is absolutely non-negotiable. Set your stop loss. Know where you're getting out before you even get in. And finally, manage your risk on every single trade.
Look, these aren't just suggestions, they are essential habits for success. First, and I cannot stress this enough, practice on a demo account. I'm talking months, not just a few days. Second, stick to higher time frames like the daily or 4-hour charts where the signals are much cleaner. Third, always look for extra confirmation. And maybe most critically, know your market environment. This is a trend-following system. Using it in a choppy, sideways market is like trying to sail a boat in a bathtub. You're just going to go around in circles.
All right, it's time for a little reality check. Because let's be honest, there is no such thing as a perfect holy grail trading system. To use this tool effectively, you have to be brutally honest about what it does well and, just as important, where it can get you into some serious trouble.
And this slide just nails the trade-off. The huge advantage, the big win, is that it's a rule-based system that forces you to be disciplined. But on the flip side, you have to accept its limitations. Its kryptonite is a choppy, sideways market. It takes real screen time to master. And, this is crucial, remember that like all indicators, it's reacting to what price is already done. It's a lagging indicator.
I really want this point to sink in. You will not become a master of this system over a weekend. It's just not going to happen. Real proficiency comes from hours and hours of deliberate practice and just staring at charts. It's a skill you build over time.
So, when you boil it all down, what is the Woodies CCI? It's not a crystal ball, it's a framework. It's a framework for disciplined, consistent decision-making. It gives you a structured way to analyze momentum, and its true power isn't in predicting the future, but in the consistency it demands from you, the trader.
And I'll leave you with this final thought to chew on. You can have the best, most sophisticated system in the world, but at the end of the day, it's only as good as the person executing the trades. So, is the real challenge finding the perfect indicator, or is it developing the unbreakable discipline to actually follow its rules? That's all for this explainer. Thanks for joining me.